Today on the Blockchain Report, Bitcoin's hanging around 115K, and it might be because BlackRock flips the ETF switch and gets everything it wants for the SEC. Rumble drops a crypto wallet to tip your favorite creator in Bitcoin, and Warren Buffett misses out on $850 million in Bitcoin gains, but hey, at least he still owns all the ketchup. All that and more on today's show. Let's get into it. Good morning, my decentralized darlings, and welcome back to another episode of the Blockchain Report. I'm Hank Hudson, broadcasting live from the beautiful San Francisco, California. It's Wednesday, that magical midpoint where you're equally close to freedom in a full-blown existential crisis. Now, before we plunge face first in today's pixelated puddle of regulatory chaos, let's ease into it with a little investor imagination. Picture a world where your dollar cost averaging is emotionally stable, and slam that like button like it ghosted you after promising 100x gains. And while you're channeling all that misplaced rage, go ahead and follow RoxomTV and yours truly at Hank at RoxomTV, because your cousin's MLM group chat is not where you should be getting your financial insight. All right, enough foreplay. Let's roll into the morning with our market rundown and see who's still afloat in this glorious sea of volatility. Let's go. All right, it's Wednesday, and today is looking okay. A lot of green across the board. It's what you want to see early in the AM hours. Right now, Bitcoin is back above 115K. Are we about to reach back into that 120K range? We're going to bring our chart shark Luca Pagano on the show in just a second and talk about it. Ethereum up to over 3,600, XRP just below $3. We have Cardano at about 73, 74 cents a coin, and Dogecoin doing what it does best, a whole lot of nothing, right around 20 cents. Seriously, what does Dogecoin do? In TradFi, looking okay. Dow Jones is up 88 points, Nasdaq's up 0.5%. The S&P 5 is also up almost 0.5 percentage point itself. MicroStrategy up nearly $1.50 today. Tesla up over 2.5% this morning. Elon, I think, is finally back in the driver's seat over there. Coinbase down almost $2.50. Nvidia down 0.5%, and GameStop sitting right around that $22.50 mark. We got a lot to cover today, so let's go to camera one, because we're going to be joined by my good friend and crypto wunderkind, Luca Pagano, who's going to help us read the tea leaves. Let's do it.
Oh, it's beautiful, Hank. This is not financial advice.
Luca, always great to have you back on the show. How are you this Wednesday morning, my friend?
Hey, Hank, how's it going? It's a pleasure to be here as always, so thank you for having me.
Oh, the pleasure is all mine. So this morning we saw Bitcoin. It's kind of rising back a little bit, just eclipsed that 115K mark.
Yeah.
Just a couple of weeks ago, we saw it 123-ish. We went all the way down to 112-ish. We're now at 115. What are you seeing right now? Was that a healthy pullback, or should we be worried?
I mean, I'm honestly pretty happy with what happened with BTC. The moment. I'm not sure, just as a recap here, Hank, and, for the folks that are watching us, we kind of foreseen this potential movement. Remember, we were here planning basically the potential pullback in this downtrend channel, let's say, which for me, it's a bull flag. It's something very similar of what we've seen on last leg up. Remember, just as a quick recap, we had this leg up from the $75,000 until $111,000. So we've seen this, we've pulled back, we've done a movement where we basically reclaim this, pullback downtrend channel. I think we're doing something very similar here. Although I honestly love much better the weak kind of flush, which we didn't get here, to be honest. But we had a very decent daily pullback yesterday, which is more similar to that movement. So For me, honestly, this is still a pullback in the leg up structure, and what I'd love to see for us to confirm this movement and this floor here that I'm showing to you guys is I'd love to honestly reclaim $115,000 today. So if we close above $115,000, for me, it's a confirmation on the movement into the upper channel, or at least that's what I'd like to see, Hank.
So yeah, and what are we looking at toward the end of the week? I know it's important that we close the week on a certain note to maintain any kind of bullish momentum. So what numbers are you looking at right now, and what should we be paying attention to as we make our way to the second half of this week?
Yeah, I mean, if we very quickly grasp, the weekly, we had a rough week last week. Let's remember that. We've had basically we finished out at minus 4.4% last week. What I'd love to see on the weekly is to get above this $170,000 for us to just quickly recover onto last week's fall, right? I think that would make very much sense. It would also position us much in the higher channel. So if we lower the frequency real quick, basically it would get us into the high ends of our downtrend channel, right? So I think that would make very much sense onto recovery and to expecting a breakout soon. So that's what we should be wary. I mean, that's on the upside. Hank, as you know, I always love to show us also what the possibilities are on the downside. So we should definitely be defending this pullback area that we had this week in terms of the $112,000.
Okay. And I also want to talk about Bitcoin's dominance. We saw when Bitcoin dropped down from those all-time highs, it felt like we saw some profit taking there, maybe getting shift into some potentially larger alpha plays like Ethereum, which we've seen in the last couple of months come back from the dead. It was sitting all the way around 1,500. Now we're at over 36. What are you seeing on the charts for Ethereum right now?
That's for me. That's a key point. First, going very quick into the Bitcoin dominance with you, Hank. What we talked about last week and what we should be seeing if we want to see a strong Ethereum and some altcoins getting stronger would be for us to keep the Bitcoin dominance below 63%. For me, that's a key point area. As we were talking last week, this is a deviation for me, which we should hold if we want to see upside, followed by a big breakdown on the weekly candle, basically almost 6% or 5.8% down on the BTC dominance, confirming this breakdown. So what I'd love to see here, heading into onto the rest, if we want to see strong altcoins, or for the folks out there that want to see that, we should see this momentum losing into 58%. I mean, it's not going to happen all at once, but we definitely shouldn't be pushing up above 63% for me, for us to see a good outlook onto the altcoins, right?
Mm-hmm. And we've had a lot of guests on the show in the last couple of weeks here, Luca, talk about what they think Bitcoin could reach by the end of the year, right? We're always playing the price prediction game. But in order to kind of confirm we might be going to that next level up, what does the charts look like in terms of Bitcoin's dominance then? Does it need to reach a certain percentage, you think, to kind of confirm that we are maybe on the next way to new all-time highs? And if so, what does that look like?
Yeah, I mean, I think as of right now, we're honestly on a scenario where we see Bitcoin going up and altcoins as well. The question there may be who's dominating as well. That's what we were talking about earlier here. For us to see like big domination in terms of BTC heading to new all-time highs, and for me, my next target is $135,000. That's what Fibonacci at least tells me. And for us to see that clearly, we should definitely head up onto 3%. And for me, the last level of defense in terms of Bitcoin dominance, or the big target, is definitely 73%. We had it last cycle. We touched this 3 times already on last cycle. So I think it's definitely a very important level for us to take into account. But if we very quickly see, FBTC, for me, this is looking great, honestly. I mean, we've seen this floor very clearly heading into latest bottom on 2020, and we definitely reacted onto that. We've seen a V-shaped recovery, which is beautiful to see. For me, things are looking good, and we should see higher highs for Ethereum. We're seeing this in terms of volume as well. Things are looking good, honestly, for Ethereum as well. So for me, again, this is the kind of thing where the question is who's most interesting, not who falls or who goes down. For me, to Ethereum really liberate himself, we should break out clearly $4,000, which has been the resistance for the last, since 2024, the beginning of 2024, we've seen this clear resistance. So if we can manage to break out this, I think.
Uh-oh. There he is. So there, Luca.
Can you hear me?
There we go. We got your back.
Awesome.
That pesky bird in the walls. Go ahead.
No, I was saying, like, things can get pretty crazy with Ethereum if we can break out $4,000, because this has been the clear resistance last cycles.
Right, and I remember the last, I think, all-time high during the last cycle for Ethereum, when Bitcoin reached that 69K mark, Ethereum was up to, I think, like around 4,800.
Yeah.
Do you think that we're going to eclipse Ethereum's all-time highs this cycle? It's been kind of a wild ride compared to previous cycles. Ethereum hadn't been moving the same way we had been used to.
That's definitely a good question. I mean, I love Fibonacci, so for marking it real quick, with this level of accumulation, we've had since the beginning of 2024, we're seeing this on Ethereum, right? Which is not, it's some good time to accumulate, and it's a big range as well. So let me mark it real quick so that you can see. For me, definitely a good level we should take an eye on is probably $5,600 on Ethereum. For me, this is a clear target. Looking out into this big range accumulation in terms of spread and in terms of time. When you have big accumulations in terms of time and big ranges to accumulate, which is this, this range is huge. And if we measure this real quick, we're talking about 165% of a range. So we should definitely be seeing, at least for me, if we can break this out, heading into the mid $5,000.
Love to hear it. Now, on the other side of the coin, we have people coming up, big names in the space, Robert Kiyosaki, Arthur Hayes, that are saying we could very well see Bitcoin crash back to 100, maybe even 90K, which would definitely seem to be some good buying opportunities. Now, not saying it's going to go that low, but what are you looking for in terms of Bitcoin if it were to fall down to that might be an opportunity for all of us to get some more cheap BTC before the next leg up?
Well, yeah, I mean, how I see it here, Hank, is for me, it's very clear that $112,000 is pretty much the last level of defense in terms of structure of this bullishness of the second leg up, right, that we're seeing here. So if we manage to break down that, for me, it's a clear signal that this as a whole is a deviation. Should definitely be testing low range, which is between 100,000 and $96,000. For me, that makes sense, honestly. So this is the two levels I'm seeing right now. We're trading in ranges, so it's a pretty clear structure, which is good for trading, So I'd be, for me personally, this is not financial advice, but for me, this counts as a second leg up until proven otherwise, right? Proving otherwise would mean we break down here. If we manage to break down $111,000, $110,000, for me, next target is into the lower range, between $100 and $98,000, and we'll see what we can get there. But definitely be looking to accumulate BTC on that zone if given, right? But for me, I'm still not looking at that until we invalidate this bullish structure. Does that make sense?
Yeah. Yeah, no, absolutely. I guess my question is, if we breached that 100K mark again, would buying at that level kind of be like trying to catch a falling knife? Because we know those 6 digits is a big psychological number for a lot of people. So if we break 100, do you think it's likely that we could see it break down maybe even to 90? Because again, the psychology of all of this certainly plays into it, right?
Well, that's honestly a great point, because something I love to talk is about the psychology behind, and to be honest with you, if things go south in that sense, and I think this is an important lesson for all the traders out there, that's why I love to anticipate to the plans, because when the time comes where you should buy, if you see the charts live there, you won't want to buy. You will be too afraid to buy. That's why we try to anticipate, try to put some beats, and try to understand the levels where important levels play out and high probability setups come. It may fail, of course, but you should. I mean, if you're seeing it live, you won't want to buy, because it will be definitely some scary prices out there. In terms of redness of candles. Do you get what I mean? That's why we try to anticipate.
Yeah, absolutely. Yeah, everybody gets freaked out when they see those red candles, when oftentimes those are the opportunities where we can kind of fill our bags with some cheap.
Exactly.
BTC,
I mean, those are what everyone wants: lower prices. The thing is, if you're willing to buy when the lower prices come, are you willing to buy fear when prices give it to you?
Yeah, it's when the blood is in the streets is when we should actually be looking to accumulate more and stuff our bags, because, like you and I, we know where Bitcoin's going. If you scale back, it's always up and to the right, but people get caught up in these short-term macro narratives that freak them out, and then we all hear the Bitcoin is over talk when, it really just dropped 20 or 30%, which we've seen far bigger corrections over the history of Bitcoin. So just to recap really quick before we let you go, Luca, the levels we should be looking out for before the weekend are 112 low and possibly 117 high, and we're in good shape. Is that right?
Exactly. That's perfect, Hank. We should see what the rest of the week gives us.
All right, awesome. Well, we're looking forward to hopefully having you back later this week, Luca. Always a pleasure. We appreciate you and your chart analysis. And for everyone at home that wants more of it, some of them just can't get enough, where should they go to get more of all of your great analysis online?
Yeah, I mean, it's always a pleasure to be here, Hank. So thank you for having me. We will try to keep this updated at Roxom. So thank you very much, and see you soon, man.
See you soon. Thanks, Luca. All right, we're taking a break, but when we're back, this morning's bull run where we go over the top stories of the day, so stay tuned. We'll be back with more Blockchain Report.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
All right, welcome back. It's 8:29 on this Wednesday morning. Bitcoin's sitting right beneath 115K, but it's time for this morning's bull run. So let's go over the top stories. And in case you haven't noticed, Wall Street is quietly rebuilding the crypto market brick by brick. And BlackRock, well, they're holding the trowel. After a $300 sell-off rattled markets last week, Bitcoin dropped nearly 10% from its all-time high of 123K. But beneath the surface, well, a new ETF structure just quietly detonated. The U.S. Securities and Exchange Commission, the same agency that used to treat crypto like a financial biohazard, has now approved in-kind creation and redemption for Bitcoin ETFs. Translation, ETFs can now swap Bitcoin in and out of the fund directly instead of using cash. This, my friends, is a huge deal. It makes it easier and cheaper for institutions to play. And it's exactly what BlackRock's been pushing for. Back in January, BlackRock filed a request to allow these in-kind transactions because when you manage $10 trillion and run the largest Bitcoin ETF on the planet, you don't ask for things, you manifest them. Now, as of now, BlackRock's ETF controls $85 billion in assets. That's more than triple the second-place fund run by Fidelity, which manages $23 billion. So yeah, the gap is very real. And with this new approval, that gap could turn into a canyon. Analysts are calling it symbolic, a signal that Gary Gensler's era of crypto foot dragging is officially over. SEC Chair Paul Atkins even said it's a new day for the agency, which is a polite way of saying the last guy was asleep at the wheel. Bloomberg's Eric Balchunas put it bluntly, saying it means there's a new sheriff in town, and apparently this sheriff likes ETFs. With nearly 1.5 million Bitcoin now parked in the U.S. spot ETFs worth over $170 billion, the gravitational pull of Wall Street on Bitcoin is intensifying. This is no longer a game of retail traders with laser eyes. This is institutions locking in exposure and hedging against dollar risk. And BlackRock is steering the ship. So while headlines scream about corrections and volatility and whatever new altcoin just imploded, the real story is this. BlackRock's ETF engine has been greenlit to go full throttle. And if history tells us anything, when BlackRock gets what it wants, markets move. So don't be fooled by the short-term dip. The bigger tectonic shift is already underway. The rails are being built, the train is leaving the station, and it's loaded with Bitcoin. There it is. Warren Buffett, the 93-year-old demigod of hold my Dairy Queen and let me buy another railroad, could have made $850 million this year, but instead he did what he does best, and that is sat on a mountain of cash and hoped for a coupon. According to Berkshire Hathaway's latest filings, the company ended Q2 with over $100 billion in cash and cash equivalents. And because Buffett refuses to touch Bitcoin with a 10-foot pole or a QR code, none of it went into the asset that has been smoking the market all year long. If Berkshire had just allocated 5% of that cash to Bitcoin at the beginning of 2025, they'd be up over $850 million in unrealized gains. But nah. Instead, Berkshire suffered a $5 billion impairment on Kraft Heinz and lost $4.6 billion in equity investments in the first half of the year. That's what happens when your hedging strategy is wait for a recession and maybe buy more ketchup. Now, to be clear, Berkshire did post a headline profit of $12.3 billion in Q2, but most of that came from insurance and bond gains, not equities. And definitely not anything that looks like Bitcoin. Berkshire stock is up 3.55% year to date, and Bitcoin, well, 16.85%. Even the S&P is beating Berkshire at about 7.5%, and Bitcoin's outperformance isn't just a fluke. It's also outperforming Berkshire's top holdings, Apple, American Express, and Coca-Cola. Let that sink in for a second. The asset Buffett once called rat poison squared is now outperforming his holy trinity of fruit, credit, and sugar water. Oh, and by the way, Buffett's stepping down as CEO. His successor, Greg Abel, has not said a word about Bitcoin, which is code for get ready for another decade of missing the obvious. Berkshire hasn't bought back a single share of its own stock this year, and it's missed the one asymmetric bet that could have actually helped. Buffett's legacy is definitely safe, but that $850 million, well, it's gone straight into the cold storage of someone with a bit more vision. And if 2017 Jamie Dimon met 2025 Jamie Dimon in a bar, they'd probably get into a fight because the JP Morgan CEO has gone from calling Bitcoin a fraud and worse than tulip bulbs to saying, quote, I'm a believer in stablecoins. Yeah, really. In a CNBC interview, Dimon said JP Morgan is expanding its digital assets because it's what the customer wants, not what JP Morgan wants, which is CEO speak for we'd rather make money off this than lose clients over it. Dimon was clear that all financial innovation comes with risk, but apparently he's decided stablecoins and blockchain are risks worth taking. Let's rewind the highlight reel here for a second, because back in 2017, he said he'd fire any JP Morgan trader caught buying Bitcoin. In 2018, he compared Bitcoin to a pet rock. And in 2024, he told the World Economic Forum that Bitcoin has no intrinsic value. And in January of 2025, he still called it a tool for sex traffickers, money launderers, and ransomware. So this recent pivot isn't exactly subtle. But the bank's actions speak louder than Dimon's quotes. JP Morgan recently partnered with Coinbase. Starting this fall, Chase cardholders will be able to buy crypto directly on Coinbase. They'll even be able to redeem Chase rewards for points for USDC. And that's not all. The bank is reportedly exploring direct loans collateralized by Bitcoin, with a pilot program potentially launching in 2026. That's right. The guy who once said crypto was for criminals is now getting ready to lend against it. Turns out, if enough customers ask for something, Wall Street eventually sells it to them. It's a tale as old as time, really. And while Dimon hasn't gone full Bitcoiner just yet, the direction of travel is quite clear. Even JP Morgan can't ignore this asset class forever, and if stablecoins and BTC-backed lending become standard tools in the big bank toolkit, that's another step toward mainstream legitimacy for crypto and another green light for Bitcoin adoption at scale. All right, we're going to take a look at what is going on the Roxom X page. Let's go to camera 3 here, boys and girls, and see what is breaking right now. Okay, let's take a peek at the top. We have, this was just in about 12 minutes ago, publicly listed Empery Digital, formerly Volcon, there we go, acquires another 88 Bitcoin. So their total holdings now are over 4,000 BTC. We're seeing this every day. All right, gang. Every day, it's either a new company is coming out and saying we're stacking Bitcoin in our company treasuries, or you'll see the players that have already started this year stacking more Bitcoin. This is no coincidence. This is the way the world is moving, and we're seeing it right before our eyes. So if you still doubt what's going on in front of you, just read any local paper or a CNBC article, and you'll see it there too. It's happening every day. We talk about it all the time. So what else we got here? Right now, okay, just in about an hour ago, Bitcoin advocate Senator Marsha Blackburn will run for Tennessee governor in 2026. Now, why is this important? Well, I can tell you why. Because Blackburn is actually a big advocate of Cynthia Lummis's plan for the United States to buy 1 million Bitcoin for their own American Bitcoin strategic reserve. Because remember, right now, the American reserve is only constituted of Bitcoin that has been appropriated via seizure or forfeiture from criminal endeavors, think like Silk Road and things like that. But the second
you are fake news.
Second, the hey, get out of here. The second we hear the United States come out and say they are going to actively start acquiring Bitcoin, we are off to the races
Yeah,
again. So
boy.
That's right. Yeah, flavor knows. So we are eagerly waiting for that day to come, because once it happens, the dominoes will start to fall, and Bitcoin, as full Bitcoin, is going to officially be out of reach for most people out there. So as we always say on the show, it's not financial advice, but we've had people far smarter than me and you come on the show and say, listen, stack what you can now, because we all know what's coming. Scale back those 15 or 16 years of Bitcoin's price charts, and everything always goes up and to the right. So this is a nice step in that direction that we already know we're going. We're just putting the guardrails there so we can actually go full throttle. And it is coming, whether you're ready for it or not. So keep stacking those stats. All right, we got any other big news today? Okay, if we scroll down a little bit, 2 hours ago, we have BAC Holdings, which is BKKT on the New York Stock Exchange, acquires 30% of publicly listed kimono maker Marusho Hata, and they plan to pivot to a Bitcoin treasury strategy. Another company, another example. Again, this is the way the wind is blowing, and you'd be a fool to ignore it at this juncture, because that's the way it's going, gang. So, this is just more of the same. We scroll down a little further. We have Satsuma Technology. They've raised $217 million and added almost 1,100 Bitcoin to their treasury stack. We're seeing it Every hour, there's somebody else either starting their own Bitcoin treasury strategy or adding to one they currently have. So the writing's on the wall here, kids. Pay attention. We're going to take a break, but when we're back, we got Blockchain Without Borders and more of this morning's top stories to come. So stay tuned. More Blockchain Report coming at you. Welcome back. It's time for a little Blockchain Without Borders, where we see what's going on in other parts of the world, because sometimes it feels like it's all about America, but there's a lot more out there. Let's talk about it. First up, Brazil. Well, it looks like they might be next in line to sail on up. The country's House of Representatives is holding a hearing later this month to discuss a bill that would allow Brazil to allocate up to 5% of its natural reserves into Bitcoin. That's a potential buy of $15 billion. And for those of you with cheap seats in the back, I said billion, that's with a B. The hearing will feature the usual suspects, the Central Bank of Brazil, the Ministry of Finance, crypto advocacy groups, fintech firms, and undoubtedly someone who thinks blockchain is just a fancy spreadsheet. The bill was introduced in November of last year and makes a pretty strong case. It argues that holding Bitcoin would help protect international reserves against exchange rate fluctuations and geopolitical risks. You know, all the things fiat currency seems to be doing such a great job with already. The bill also pitches Bitcoin as a gateway to promoting blockchain technology in both the public and private sectors. Now, this isn't a done deal just yet. If the House approves it, it still has to go to the Senate, and then it's up to President Lula to actually sign it or veto it, depending on whether he sees Bitcoin as a digital gold or a digital nonsense. So far, public response has been a little mixed. Brazil's Vice President Chief of Staff called Bitcoin the gold of the internet and said the debate is vital to Brazil's future prosperity. But the central bank's director of monetary policy, well, he thinks adding crypto to the country's reserves would be inappropriate. Or, in other words, it's not printed by us, so we don't like it. But Brazil wouldn't be the first to go sovereign stacker after Trump signed an executive order in March to create a U.S. strategic Bitcoin reserve. Other countries started sniffing around with the idea. Kazakhstan's planning one, possibly from seized coins. India and Sweden are rumored to be exploring options. And El Salvador is still out here tweeting laser eyes from the presidency. So if Brazil follows through, expect some headlines and possibly a new green and yellow laser eyes meme. More importantly, expect price action, because when a major economy buys Bitcoin, it usually leads to another letter, and that is P for pump. All right, next up, China's legendary on again, off again relationship with Bitcoin took another dramatic twist this week. Or did it? It's always hard to tell. On Sunday, a bunch of social media accounts began breathlessly reporting that China had once again banned crypto trading and mining. Again. Because apparently China bans Bitcoin as the Friends reunion of crypto headlines, except it happens every 6 months and no one thinks it's funny anymore. The Kalshi betting platform account on X dropped an all-caps banger, citing capital flight and environmental concerns. It racked up nearly 800,000 views. First Squawk amplified it, but when actual humans looked into it, nada. Su Zhu, co-founder of the now-defunct hedge fund Three Arrows Capital, said his Chinese sources show zero evidence of a new ban, and Colin Wu, a crypto blogger and China watcher extraordinaire, confirmed there's no new restrictions at all. So let's review the historical rerun here quick. China first banned Bitcoin transactions via financial institutions way back in 2013. Then came the 2017 blanket ban on ICOs and crypto exchanges. Then the 2021 crackdown on mining, which somehow didn't stop China from maintaining 21% of global hash rate today. Also worth noting, China has never banned individual crypto transactions. So what exactly are they banning now? Feelings? Vibes? I don't know. Meanwhile, stablecoins and real-world asset adoption are quietly gaining traction within China. Yeah, even among government officials. So either they're banning Bitcoin again, or, I don't know, someone needed a few thousand retweets and dusted off the oldest FUD in the playbook. I don't know, I guess only time will tell on that one. Get it together, China. And in other news, Namaste is the new number 2, as India now holds more Bitcoin than China, Germany, and Russia combined. Analysts estimate that the country's holdings at 1 million Bitcoin are about 5.1% of the total supply. Only the US has more. America still leads with around 7.8 million Bitcoin, mostly held by institutions, companies like Strategy and the FBI's evidence locker. But India is making up some ground, and fast. They're doing it with one hand tied behind their back, as a 30% capital gains tax exists there, a 1% tax is deducted at source, and zero official support from regulators. It's like they're climbing Everest in flip-flops and still beating everyone else to the top. Now, these numbers aren't from government disclosures, by the way. They're from on-chain analytics, exchange data, and a growing industry consensus. India has over 119 million crypto users, which is the most in the world, and while their portfolios may not be massive individually, together, they're stacking. The country's young, mobile native, and financially curious, which apparently is a perfect recipe for orange pilling a billion people. Still, the Reserve Bank of India isn't exactly throwing a party. They've been cautious, and the tax policies haven't exactly helped. But the demand is there. And the message? Well, even one of the most hostile environments for crypto regulation, Bitcoin finds a way. And if India ever loosens the leash, the US might not be number one for much longer. Because in the global race for digital money, the tortoise is holding all the sats. All right, we're taking a break. When we're back, we're giving more to our bull run, and we got an interesting story ahead with Rumble, as they are going to be accepting Bitcoin payments for their creators, so you can finally start creating and then earning in sats. More on that when we're back. Blockchain Report, back in a sec. All right, welcome back to this morning's bull run. Rumble, the anti-YouTube for people who think YouTube is too soft and restricts freedom, is launching its own crypto wallet. Because if you're going to monetize your free speech, you might as well skip the traditional bank while you're at it. The new Rumble wallet is being rolled out in partnership with Tether and MoonPay, an alliance that basically screams, "I swear this is real money." Rumble's CEO Chris Pavlovski says the wallet will let users send and receive Bitcoin, stablecoins, and possibly some opinions that would get you banned elsewhere, all without the middleman. No banks, no PayPal, no YouTube, revenue share disappearing into the void. You tip your favorite creator, they actually get the money. Totally weird, right? Now, this is part of Rumble's bigger mission to promote free speech, empower creators, and let's be honest, capitalize on creators who've been demonetized into irrelevance by the big guys. But now, those creators can get tipped directly. No 45-day payout delays, no ad revenue black holes, no "your video was too controversial for advertisers" messages from Google, the Google gods. This is financial autonomy with a side of Web3 marketing jargon. And honestly, it might work, because if there's one thing creators want more than clout, it's control. The wallet integrates MoonPay for buying and selling crypto inside the app, making it easy for the crypto curious to slide headfirst into decentralization, or at least into giving someone $5 in USDT for yelling about fiat. And it's all powered by Tether, which is either the glue of the global crypto economy or a ticking time bomb, depending on which article you read. Regardless, the wallet's supposed to be fast, simple, and immune to content takedowns. Which means if your video gets nuked from every platform except Rumble, at least you can still get paid. The move is a not-so-subtle jab at traditional platforms like YouTube and TikTok, which are great unless, you're talking about anything remotely spicy or outside the Overton window. And while Rumble's decentralized credentials are debatable, their wallet definitely fits the part. No launch date yet. It's in classic Web3 limbo, as in coming soon. But when it drops, you can bet the creators who've been shadow banned, demonetized, or just really into sovereignty will be there first in line. Because at the end of the day, Rumble doesn't want to replace YouTube's culture. They want to replace its payment processor. And in crypto, that, my friends, is the real power move. Semler Scientific is back in the news. They are first healthcare company. Now they are a healthcare company powered by Bitcoin. Because when your revenue falls 43%, your operating expenses balloon to $10 million, and you somehow walk away with $66.9 million in profit, it means you probably bought Bitcoin. And they did, and lots of it. Semler posted $83.8 million in unrealized gains from its Bitcoin treasury in Q2. That's a lot. The company made more from number go up than they did from their actual products. Their net income went from $11,000 in the same quarter last year to $66.9 million this year in this same quarter. So all while losing money on operations. And the company's chairman couldn't be prouder. Eric Semler says their Bitcoin treasury strategy has generated $110.4 million in unrealized gains this year alone. This is what he had to say during the Q2 earnings call. Let's roll the clip.
Since adopting the Bitcoin standard just over a year ago, we've strategically and assertively acquired 5,021 Bitcoin, now valued at approximately $586 million, with a cost basis of $476 million, resulting in an unrealized gain of $110 million. So far in 2025, we have acquired 2,723 Bitcoin and generated a BTC yield of 31%. This resulted in BTC gain of 719 Bitcoin and a BTC dollar gain of $84 million as of July 31st.
Bitcoin yield? Not too bad for a medical company. Semler Scientific also launched Cardiovanta, a subsidiary focused on heart failure and cardiac arrhythmia detection. You know, in case anyone's heart stops from checking their Bitcoin balance. To cap it all off, Semler entered into an ATM offering agreement to sell up to $500 million in stock through major banks. So, yeah, health tech by day, Bitcoin gigachads by night. It's the Michael Saylor model, but with blood pressure monitors. And honestly, it seems to be working. SEC Chairman Paul Atkins, well, he's officially launched something called Project Crypto. It's a sweeping initiative to modernize U.S. securities laws using blockchain technology. Because nothing says modern like using the world's slowest government agency to regulate the world's fastest moving asset class. The plan is actually pretty simple, according to Atkins. Stop chasing crypto projects offshore with vague rules and instead give them a reason to come on home. This means clear classifications for tokens, single state licensing for app builders, and letting the SEC work with the new crypto task force. Yeah, that's a real thing, and no, it doesn't come with capes. Atkins claims this will align the President Trump's goal of turning America into a global crypto hub. He even quoted Congress saying they intended for competitive forces to drive the national market system, not red tape and 70-year-old statutes. Meanwhile, venture capitalist and all Bitcoin everything maximalist Tim Draper is practically foaming at the mouth. He took to X to say Project Crypto could make his dream of a Bitcoin-only world come true. A fund raised in Bitcoin, employees paid in Bitcoin, accounting, taxes, audits, all on-chain. Basically a world without middlemen, just smart contracts and optimism. Draper said the whole system could run on software. No human error, no friction, no accountants either, so a mixed blessing. Now, what does this all mean for Bitcoin itself? Well, if the SEC truly lets crypto operate with regulatory clarity instead of whack-a-mole lawsuits, we could see more businesses going full Bitcoiner. That means more demand, more on-chain infrastructure, and yes, more moon math. The SEC usually gets mocked for being behind the curve, but if Atkins pulls this off, it might be the first time a regulator creates a bull market on purpose. We'll see how that plays out. And Donald Trump, I think it's the first time we actually mentioned him on the show today, which is very odd. Well, he has spoken again, and Scott Bessent is not going to be the next Fed chair. In an interview with CNBC, Trump confirmed the Treasury Secretary is staying put, which is ironic because Bessent is the guy helping lead the search for Jerome Powell's replacement. Apparently, finding your own replacement is now part of the job description. Trump did confirm that Fed Governor Adriana Kugler will be stepping down this Friday, a few months ahead of schedule. She's heading back to Georgetown University, where presumably she'll be teaching macroeconomics, and it doesn't come with daily CNBC interrogations, so I can understand the appeal. That early exit gives Trump an opening to appoint a short-term replacement and potentially the next Fed chair in waiting. Trump listed Kevin Hassett and Kevin Warsh as contenders, as apparently you now need to have it be named Kevin to run monetary policy here in America. No, it's true. Look at it. Now, there's also some reporting that Christopher Waller is in the mix, but Waller's cautious approach to rate cuts may not win him any Mar-a-Lago golf invites anytime soon. Trump has been very vocal about wanting interest rates cut by 3 percentage points, which is basically the monetary equivalent of jumping out of a plane and hoping rates hit the ground first. So, will Trump fire Powell? Nope, not legally anyway. He wants to, but under Section 10 of the Federal Reserve Act, he can't just yeet the Fed chair for not cutting rates fast enough. There has to be cause, and not doing what I tweeted doesn't count. Also, after pushback from JP Morgan CEO Jamie Dimon and other finance overlords, Trump confirmed Powell will finish out his term. But make no mistake, changes are coming. Trump is already reshaping trade policy and apparently auditioning every economist with a pulse to replace Powell. If a pro-Bitcoin Fed chair ever sneaks into that shortlist, you can bet the market won't be the only thing that pumps. And Robert Kiyosaki's back in the news. The author of Rich Dad, Poor Dad and Twitter's unofficial financial hype man is praying for a Bitcoin crash. Not because he hates Bitcoin, it's because he wants a bigger bag. In a recent post to his 2.8 million followers on X, Kiyosaki invoked what he calls the August curse, a historical trend where Bitcoin tends to nosedive in the late summer sun. He floated the idea that Bitcoin could drop below 90K this month. Yeah, I know. And instead of panicking, he's foaming at the mouth. Kiyosaki wrote, "If the Bitcoin August curse hits and Bitcoin crashes, I stand by 2x my position today." So he's not going to buy the dip, not accumulate cautiously, oh no, he's going to double up, because nothing says fiscal responsibility quite like rooting for a 21% crash so you can go all in. Now, to be fair, Kiyosaki, he's got his reasons, and they're not totally irrational. He sees the real problem not as Bitcoin volatility, but as, and we quote, "our multi-trillion-dollar debt and incompetent PhDs running the swamp, the Fed, and our Treasury," which for a guy who's made a career out of warning people the sky is falling is pretty on brand. He spent the summer attending financial education events like The Collective and Limitless Financial, where he listened to gold bugs, real estate guys, and Bitcoiners wax poetic about the end of fiat. So now he's feeling bullish, or maybe hopeful, for devastation is more accurate. He also took a jab at the traditional education system, comparing financial experts like Larry Lepard and Jim Rickards to real teachers, unlike apparently fake school teachers who have no idea what they teach. Stay in school, kids. Unless Robert Kiyosaki says otherwise, of course. Now, at the end of the day, his bet is quite simple. If Bitcoin dips in August, it's not a failure, it's an opportunity. And if he's right, the so-called August curse hits again, you'll hear the sound of a 72-year-old man doubling down on digital gold echoing through the market. Some people, they fear a crash. Others, they prepare for it. Kiyosaki, he's bringing the snacks. We're taking a break. When we're back, tales from Hodlwood. Let's see what's going on at the intersection of, AI and crypto in the world. It's a wild one out there. Stay tuned. Blockchain Report coming right back.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
All right, it's time for some tales from Hodlwood, and a move that should surprise absolutely no one in the simulation. Hollywood has decided to make a movie about billionaires bickering over AI. The upcoming film is called Artificial, and yes, it's a comedy drama, because what else do you call the 3-day civil war that happened at OpenAI back in 2023? Amazon MGM Studios is backing the project, which is currently in development and expected to shoot later this year with a release date sometime in 2026. And what can only be described as a bold casting choice, Ike Barinholtz is in talks to play Elon Musk. Yeah, that Ike Barinholtz, the one from the Mindy Project and the studio. Apparently, Hollywood's plan is to portray the richest man in the world as either an egomaniac or a punchline, or perhaps both. Elon may want to post his complaints now because according to reporting from Puck, the script refers to him as a dictator. It includes several scenes of what's described as villainy and comic relief. Or in other words, it's not a flattering biopic. It's a roast with production design. Andrew Garfield will reportedly play Sam Altman, the OpenAI co-founder and current CEO, who was famously fired and then unfired in 2023 after allegedly being less than truthful with his board. Altman, if you recall, was accused of withholding key information, misrepresenting facts, and allegedly making the work environment so toxic that two executives claimed psychological abuse. In response, hundreds of OpenAI employees threatened to quit unless Altman was reinstated, which he was 5 days later, because nothing says good governance like an HR crisis followed by a group hug. Also set to appear in the film is Yura Borisov as Ilya Sutskever, the OpenAI co-founder who helped boot Altman and then signed a letter saying oops and demanded that he come back. The movie is being directed by Luca Guadagnino, best known for turning Call Me By Your Name into an Oscar darling and Challengers into a thirst trap. So, yeah, expect long stares, tension-filled silences, and possibly Musk and Altman sharing a peach. Forbes reports that Elon Musk is currently worth over $415 billion, while Altman's net worth is estimated at $1.8 billion. In movie math, that means Elon gets top billing and Altman gets portrayed by a Spider-Man. Now, as for the other billionaires involved, they're not exactly safe either. Microsoft CEO Satya Nadella and Anthropic CEO Dario Amodei are also reportedly in the script, possibly getting their own turns on the caricature carousal. No word yet on whether Bitcoin will make a cameo, but considering the film centers on the OpenAI meltdown, it really should. Because if there's one thing that isn't artificial in this whole saga, it's Bitcoin. The only real, apolitical, decentralized tech, and a story full of power struggles, egos, and PR cleanup crews. And let's be honest, by the time this movie hits theaters in 2026, the most unrealistic thing about it might be the fact that none of the billionaires paid for anything in Bitcoin. Victor, I want to talk about this one. I know you are quite the cinephile, and I always love to see how castings match up with the real world people they're supposed to be portraying. What are your thoughts on these castings? Some interesting choices here.
Yeah, I like Andrew Garfield. I don't know if he would be my first choice to play Sam Altman, but we'll see.
Who would you go with? Do you have someone in mind that you think would maybe? I mean, I think Garfield kind of looks like him-ish.
Well,
there's no one who comes to mind immediately.
I think my
like
thing is that I think Andrew Garfield is very attractive, and I don't see Sam Altman attractive, so...
Oh, well, maybe they'll like fudge up his nose or make him look
Most
a little
likely,
maybe gain
yeah.
some weight for the role or something.
Yeah, I can
And,
see
like,
that. Yeah.
You know, in Hollywood, everybody's always a little bit more attractive than the people they actually played. What's his face from Napster was portrayed by Justin Timberlake in The Social
that's
Network.
true. Yeah.
Like,
Yeah.
you know.
No, I'm actually pretty excited. Luca Guadagnino is one of my favorite directors. Did you know?
Okay.
Did you know they're filming it in San Francisco, like right now?
Oh, really?
Yeah, that's
Oh,
all over
man.
TikTok. They've seen Andrew Garfield walking around like at the Marina District. So,
Oh man, we're gonna start contacting his PR people for an interview.
yeah,
on the
maybe we
show. That
can
would be
bring
cool.
them in.
Right, get on in here. Maybe they can film a cameo or something. Who
Yeah, that
knows?
would be awesome.
And then they also had that Ike Barinholtz as Elon. He's
Yeah.
an interesting guy to cast. I'm not even sure who I would pick if I had the option
Right,
to.
Gaston, can you put up my share screen? See there you go. See, I don't see it either.
I
But
don't either, but the makeup teams are so good.
that's true.
And I've seen Barinholtz play like kind of funny, pompous characters before, so like maybe just the acting chops are there and they'll figure out the whole face thing later. I don't know.
Yeah, I mean, I guess so with makeup now you can, and maybe they'll use AI.
That's true and terrifying. Maybe they will use AI. Yikes.
Here,
and then there's that other movie that's coming out. Oh no, what do you got? More pictures?
Oh
Let's
yeah,
see.
go for it. What were you gonna say?
No, I was going to say there's another kind of movie that's akin to this. Is they're making The Social Network 2, right?
Right.
And they replaced Jesse Eisenberg with word on the street is Jeremy Strong, who doesn't really look like Zuckerberg, but man, is he a good actor. So I'm actually pretty pumped for that recasting. I'm not a huge Eisenberg fan personally.
I don't mind
what do I
him.
know?
I just had a couple more pictures of the cast and just kind of comparing them.
Yeah.
Like I was talking about. Let's see.
Yeah, let's take a peek.
Yeah, Andrew Garfield, Sam Altman. I don't see it. But
Well, you get rid of the beard, maybe. You know, the beard is the makeup for men, right? It makes us all look a little bit better and
Yeah.
less, you know, like, blah. So I think maybe you pull the beard back, you fix his hair a little bit. But
contacts.
I hear you.
Yeah.
And like, I feel like Garfield's head's a little small. Altman's got one of those big mantle pieces. I feel like you need somebody like that.
Yeah.
Doesn't quite fit it for me. And they've already started production on this, right?
Yeah, they're filming it already. Yeah.
I think his girlfriend, right, is the girl that Garfield's seeing that was showing up at Wimbledon. I think she's in the movie. Is that how they met, presumably? I think.
I don't know. I don't follow much of the gossip,
She's
but
cute, though.
you could be right.
Yeah, I don't know. And then, so I guess the actor is the one on the left here. I'm not familiar with his work.
He was in Honora. It won Best Picture last year. And he was nominated.
Okay, so he's probably
He's really good.
He's a hot commodity right now.
Yeah.
Honestly, call me crazy here. I feel like the guy on the right, the Ilya guy, you take Henry Cavill, you shave his hair into a horseshoe pattern, he looks like a better looking version of this guy.
I agree.
He looks a little Cavill-esque, right?
Yeah.
I say that in a very complimentary way. He's a handsome cat, so, you know.
And then
time to
there's
recast, although I'm sure
Monica
that guy's-
Barbero. All this picture isn't loading.
Let's see.
Oh, yeah. Because she was in A Complete Unknown. She was also nominated.
She was. Yeah, she's the one who's dating Garfield in real life. I bet they met on this
Oh,
project.
they are.
She's
Oh,
cute.
okay.
Yeah. Okay. I mean,
not that
she's
bad
a
of a
girl. She's got
casting.
brownish hair. She's got a face. It's pretty close.
I
They
can
got
see
anybody
that.
else?
Yeah. I think that's it. Yeah. But
That's it.
I'm looking forward to
I'll
it.
be interested in seeing it.
This casting is great. I mean,
Those
The
were a wild
actors are
couple
great.
of days. I'd actually be curious too if Emmett Shear is featured in it. I actually had the pleasure of doing an interview with him sometime like late last year, and he was the OpenAI interim CEO when Altman got fired, and Shear was one of the co-founders of Twitch. So I'll be curious to see who maybe they have play him. He's got a look too, but it looks like he won't be a featured player if he's not on this. You know what is
don't know.
a Business Insider article. So I don't know. We'll see. All interesting stuff. All right, we're back, and before we go to our bullish, bearish, or BS, we got one more story for you. Is the statue of Satoshi Nakamoto, which was installed last year in Lugano, Switzerland, was recently ripped from its base and thrown into Lake Lugano. Animals. Now, because nothing says celebrating decentralization quite like hurling a symbol of it into a lake, I guess. The statue, crafted by Italian artist and Bitcoin maximalist Valentina Picassi, was unveiled in October of 2024 and took 21 months to plan and construct. It was installed in Park Oceani, a scenic lakefront park, until some mystery vandals decided to go full crypto performance art and send it swimming into the lake. Municipal workers recovered the statue in several pieces. It wasn't stolen, it was just smashed a little bit. According to the artist, it had only been welded to the base at 2 points, so removing it was about as hard as pulling an IKEA lamp off of a shelf. Now, Satoshi Gallery, the art collective behind the installation, offered a 0.1 BTC reward, that's over 11 grand, for its return. It's unclear if anyone actually claimed it. Online reaction ranged from sadness to disgust to speculative rage. One synonymous user blamed drunk partygoers from Swiss National Day. Another said, "Such a tasteless and stupid thing to do," which, to be fair, could be the tagline for most things in 2025. Tether's CEO, Paulo Ardoino, responded with a single heart emoji because even when Bitcoin monuments get attacked, the vibes remain immaculate. Satoshi Gallery put out a statement saying, "You can steal our symbol, but you will never be able to steal our souls." Dramatic. They also confirmed plans to install similar statues in 21 locations around the world because Satoshi may be synonymous, but his presence is getting harder and harder to ignore. Now, the statue will be repaired, the movement continues, and Bitcoin remains undefeated, even when it's in underwater, literally. All right, let's wrap things up with a little bullish or bearish. Let's roll that stinger, please. All right, time to wrap things up with a little bullish, bearish, or BS, where we go over our top stories of the day and say if they're looking good, bad, or otherwise for our beloved Bitcoin. First up, our recap. Rumble, the platform for creators that are too spicy for YouTube, is launching its own crypto wallet in partnership with Tether and MoonPay to let users send and receive Bitcoin and stablecoins without middlemen or censorship. Whew, I'm bullish on this. I mean, this move pushes financial sovereignty for creators and normalizes Bitcoin as a censorship-resistant payment method, especially in an era where traditional platforms are throttling payouts and free speech. If Rumble adoption grows, Bitcoin usage will rise in parallel, expanding the network effect and putting more eyes and wallets on Bitcoin. So direct payments in Bitcoin to demonetize creators, that's bullish for adoption and for Bitcoin's price. So I'm bullish on that. Next up, the SEC has approved in-kind creation and redemption for Bitcoin ETFs, meaning ETFs can now swap Bitcoin directly in and out of the fund instead of using cash. A move BlackRock has been pushing for that could massively scale institutional Bitcoin flows. Very bullish on this. I mean, this is how Bitcoin goes from a hedge to a pillar of modern finance. In-kind ETF flows mean less friction, lower fees, and deeper liquidity, all of which paved the way for more big money to park itself in Bitcoin. BlackRock getting exactly what it wants? Well, historically, not a great sign for democracy, but absolutely fantastic for the Bitcoin price chart. So BlackRock's ETF structure is getting greenlit. That, my friends, equals rocket fuel for Bitcoin's next leg up. So 2 bullish, 0 bearish, 0 BS. Let's see if we can go for the clean sweep today. Lastly, Berkshire Hathaway left $850 million in gains on the table by not allocating even 5% of its $100 billion cash pile to Bitcoin in 2025, while Buffett's beloved equities lag behind both Bitcoin and the S&P 5. Bullish on this too. I mean, every time a legacy investing icon gets publicly dunked on by Bitcoin, it chips away at the boomer portfolio narrative. Buffett missing out is the best Bitcoin ad we didn't have to pay for. It reinforces Bitcoin's value proposition and shows that even the smartest money can look really dumb when they ignore asymmetric bets. So Buffett fading Bitcoin while it outperforms his portfolio, that's bullish PR in disguise. So today's final tally, 3 bullish, 0 bearish, and 0 BS, meaning absolutely freaking bullish day. The rails are expanding, the institutions are upgrading, and the old guard is still ignoring Bitcoin at their own expense. Feels like 2020, except, with more power, ETFs, and fewer excuses. As always, thanks for tuning in to the Blockchain Report. Make sure to like, follow, and subscribe to RoxomTV and yours truly at Hank at RoxomTV. And I'll be back same time and place tomorrow. Until then, stay bullish, and as always, hodl on. I'll see you then.